China's economic growth is likely to slow down sharply to about 3% in 2022 due to the lingering impacts from the COVID-19. External demand has been one of the most important supporting factors to China's growth in 2022. Net exports contribute almost one-third of China's real GDP growth in the first 3 quarters, strongest support since China published the breakdown data from 2009. However, given the global economy is expected to slow down further in 2023, external demand is likely to be a drag for China in the next few quarters. As such, domestic demand will play a bigger role in 2023 to support Chinese growth. We think the 3 R's, including re-leverage, reopening, and re-engagement, will be the key theme for China in 2023. On re-leverage, China has announced a number of the property easing measures, indicating China's pivot away from a restrictive housing policy. Given China is moving from saving projects to saving both projects and developers, China's property pivot will set the floor for the sectors in 2023. On reopening, since the publication of our Global Outlook report in late November, China's COVID policy has made a U-turn in early December. The earlier than expected reopening in a harsh winter is negative for the growth in 2022 due to the recent COVID tsunami, but positive for the growth in 2023 as the domestic demand may recover faster. On the re-engagement, China's President Xi has met global leaders in both China and overseas since the conclusion of the 20th Party Congress. China's re-engagement with the Western government will be likely to keep the tail risk in check. From macro policy perspective, the latest annual Central Economic Working Conference has set the tone for 2023, with restoring the confidence being the key theme. China will rebuild the confidence via 4 avenues. First, proactive fiscal and monetary policy. As mentioned by the PBOC Deputy Governor, that the intensity of the monetary policy easing will at least match that in 2022. This implies that there is still the room for China to cut interest rates in 2023 should the dollar peak. Second, housing and automobile will remain the major areas where the policy supports for the household consumption in the near term, while the elderly care will become an important sector to boost the consumption in the medium to the longer run. Third, China will also focus on the diffusion major economic and financial risks, of which stopping the decline in the property markets has been the most urgent task. Given China's top leaders have reckoned housing is a pillar industry for China, more measures are likely to be rolled out to support the housing market. Fourth, restoring market expectation is a precondition for the confidence building. China will work hard to reassure its commitment to support the private-owned economies as well as the platform economy. Overall, we expect China's growth to re-accelerate to about 5%, with the upside risk to 6%, depending on the development of the COVID situation in 2023, bucking the trend of the global slowdown. We estimate additional 7 to 8 trillion RMB excessive savings in 2022 will be supportive of the domestic demand in the next few years.